Hi there, welcome to Kneppy Invest and another answer and reply video. I'll go through some of your comments, and if they're questions, I'll answer them. If they're comments, I'll just talk about it. And we're going to start today, going back 3 weeks ago to Chris Brown. He's responded to a bit of analysis I did on KMD, and I thought, why not go back to this company? Because KMD used to be called Kathmandu, will release their financial results this week. And the reason I know that is because I just saw it. Yeah, financial year 24 release date. There was an announcement. I just opened it up. 25th of September. So I'm recording this video on the 21st of September. So interesting to see how they do perform or will perform for the financial year. They did have a loss in the first half. And if you had a look at the PE ratio of this company, you might think it's expensive. And I will explain why that could be a mistake and why this company could be looking like it's good value, even if the share price has rallied by about 40% over the past few months. So let's get stuck into it. In this question or this comment from Chris Brown, glad you got some value out of my comments on this company. He's a shareholder, or she. Chris could be, I suppose, a woman, but it will require a bit of patience to see the share price get back up to fair value price. I probably agree with that, but the company is showing a little bit of strength right now. 50 cents is still quite low. There's been concerns about funding with their bank debt situation and also the last several quarters of poor trading results. Now, they did do or release a trading update that sounded actually quite positive. That was on the 20th of August. That did actually sound quite positive. Did look like things are starting to turn around for this particular company. And in fact, the previous trading date update before that was the 21st of June. So this company does release trading updates every so often. Anyway, so let's have a look at the chart, and then I'll also have a look at the financial state of this company just by looking at revenue and profit. And I'll just discuss why, if you had a look at the PE ratio, you might be on the wrong path. Okay. So where's the chart? There it is. There's the chart. So KMD Brands has been in a downtrend. And one of the reasons I like my color scheme here is whenever I see like two shaded areas for these two moving average channels, it's obviously a downtrend. And so KMD Brands moved into a downtrend back in June 2023. And it stayed in it, and at that point in time, share price was around $1. Stayed into the downtrend until recently. And we started to see the shorter two moving average channel turn green. So that's the first thing we want to see. We want to see that moving average channel turn green, and then we want to see the longer term moving average turn green. So the longer term investors are now liking that something they see in KMD Brands. So people like Chris, or maybe even people like me, are seeing this possible turnaround and shift in sentiment, turn around in the share price and shift in sentiment as well. And that has been occurring over the past few months. So a little bit of a positive trading update. And if they do release better than expected results, and if they do have another trading update when they release their results, maybe things are moving in the right direction over the past few months since the end of their financial year, possibly the share price will keep on moving up from here. So I do like this particular chart over the past few months. The other thing I really like, share price got to a low of 32 cents towards the end of June. And look at the volume. Look at the volume explode when the share price of this company got to the bottom. I've seen this time and time again. That's a good sign that potentially value investors are liking something they see in this company. So really expansive growth in volume, not only in just one day, but over about a 2-week period where we just saw explosion absolutely increase. And then the share price, in fact, you could actually argue the share price is moving into definitely argue share price is moving into at least a short term, maybe even a medium term uptrend. One of the things I don't like to see here is volume is gradually decreasing. So there is decreasing interest in this company. And the other thing is the share price has pulled back from about 54 cents down to 45 cents. This could be a buy the dip situation. And the good thing is, as the share price has dipped, the volume has kept on falling, which means there's not as many keen or enthusiastic sellers. So possibly all those who bought when the share price was much higher, maybe they've already sold out. In fact, if you actually even go back further, I would say that was a false breakout back in May, and the share price of this company has been a downtrend since January 2022. At that point in time, share price was about $1.40 or so. And if you have a look at the weekly chart, the other thing about this is the share price right now is at long-term lows or near long-term lows. Maybe we should say bouncing off long-term lows. In fact, I put this line here, this dashed line, and that is sort of a long-term support level. Can't really say that now. In fact, I'd say that's now resistance level. And here. So anyway, so the main thing here is if you look at the daily chart, things are looking like they want to move in the right direction. Now, this is not an uptrend just yet. It is definitely not a shift in sentiment just yet, but definitely things are starting to move in the right direction for KMD brands, just based off the chart. Now, I had a look at their financials. So this is KMD brands going back to 2014, 10-year history. You notice an explosion in revenue. This is revenue and profit, by the way. Explosion in revenue back between 2019 and 2020. They did make an acquisition of Rip Curl. I don't know when that was. They also make an acquisition of a shoe company in America, Ozone or something. Ozo. In fact, I can tell you right now. Ozo. I'm pretty sure it's got Oboz, that's it, Oboz. So Kathmandu, Rip Curl, and Oboz. That's why they changed the name from Kathmandu to KMD brands, because Rip Curl and Oboz. Not sure how big Oboz is, but it's pretty sure it's a shoe company. Anyway, so if you go back to the financials, nice growth in revenue. Now the revenue, and the last column here, well, the last two columns are the last 12 months. So if you go and have a look at the financial year 23 numbers, $1.1 billion in revenue, $35 million in profit. So this company does exist on fairly low margins. So $35 million in profit, and the market cap of this company currently is probably about 300 million, 345 million. So based off financial year 23 results, the company is currently trading on a PE ratio of roughly 11. However, if you go to TradingView, PE ratio is 32.49. If you go to ComSec, PE ratio is, well, it's nothing. There's a reason behind that. If you go to many other sites, you'll see the PE ratio of this company is above 30. The reason behind that, and the reason why there is no PE ratio in ComSec, is because in the last half year, this company had a loss. So if you take account of that loss with the second half of last year, this company has a very small profit, hence the high or elevated PE ratio. So if we go back to some of the previous years, this company has generated profit consistently above $30 million. One disappointing thing about this is after they made the acquisitions of Rip Curl and Oboz, the profit hasn't increased. So the revenue's increased, but the margins have dropped as revenue increased, so profit's about the same. The record profit was 2021 with 61 million. That's probably, what I'm going to do here is I'm going to make an assumption that they can return to profitability in the next few years. And what is the sort of profit this company could generate? I'm going to be a little bit conservative with that assumption, with that way of thinking, and say I think this company could get back to making $40 million of profit, which means at a market cap of 350 million, this company is trading on a PE ratio below 10. And in my opinion, that's pretty good. But I probably like that a little bit lower because I'm not sure how much growth this company is going to have over the next few years. And the simple reason behind that is we haven't seen much growth in this company over the past few years. So a lot of uncertainties when it comes to this company, but I think there's definitely an argument that this company is looking pretty good value at current levels, as Chris Brown said. And I think that's all I'm going to talk about when it comes to KMD brands. I have not thought about taking a position in this company just yet, but I'm just going to wait to see their results, see what happens. And that could lead to a breakout. If I see the share price get above 54 cents, that could be a breakout. And if it's on the back of good financial results, that could be my definition of a very powerful breakout or potentially powerful breakout. It's my favorite sort of breakout. Positive financial news, high volume, share price at least 3-month high. I do prefer 6-month high. Okay, so thank you, Chris Brown. Stu Percy says he uses Nuix. I have received a few emails from Nuix saying we are willing to pay the remaining of your share site subscription if you come over to us. But I think I had to say yes to that a few days ago. Anyway, Stu Percy. Oh, this is an interesting comment. For some reason I need a drink. Stu Percy says, property has been pushed by the government as an investment. Absolutely true. I do have a way of thinking that I heard something interesting the other day, that homelessness is mostly correlated to home prices. That makes sense. If you can't afford a home, then where are you going to live? On the streets. Anyway, and I do believe that a home, somewhere to live, is a human right. And I do have a problem that property is being pushed as an investment. It should be pushed as a place to live first. And yes, and the other, one of the main reasons I don't like property as an investment, particularly residential, is because technically property should grow at similar rates than wages. Because if property grows at a greater rate than wages, then eventually no one can buy property. It's just not feasible in the longer term. And over the past maybe 20, 30 years, property has grown at a greater rate than wages. And now we're seeing the ramifications of that the younger generation just can't buy homes, or they need to go to the bank of mum and dad. And that is not a feasible way to live. That is not something that can last permanently for a long time. So something has to happen. Yes, property has been a great investment over the last 40 years. People have got filthy rich, and it has to change. It has to change. And Stu Percy says, but those days are coming to an end. Now, my other big problem with this is so many members of parliament have significant investment properties. Significant. And you can see all this information. The government, we provide this information. What do the politicians have in regards to investments? It's out there for public knowledge, and you'll be shocked how many or how much investment properties government officials have, politicians have. And do you think they're going to make significant changes that will affect their investments? And I have thought about this recently, and this is just a recent thought, and I haven't really thought too deeply. Should there be a rule that politicians have no investments? Should that be a rule? So if you want to if you get successful, you have to sell all your investments. And then when you lose your political position, maybe you can invest. And the reason I was thinking this is because all these politicians have so much property, they're just instinctively will not want to make any changes to any regulations, or they'll bring in regulations or rules that can be beneficial to property. And I think that is something that needs to be looked at. I'm not sure if there is an answer to that, because I do think there would be a pushback if that sort of thing happened. But it sort of makes sense. You don't want your politicians to have any sort of, bias, any sort of self-motivation when they do make rule changes or anything like that. You want them to be making rule changes that are beneficial for everyone, not everyone, but for the country at large. So for some individuals it would be beneficial, for some not. But for the country at large, it would be beneficial. And we're on the path right now that this is not beneficial for future generations, where property is right now. And for those who benefit it, it's great. But it's not beneficial for future generations, particularly those who aren't the children of rich people, or those who have got filthy rich from property. And this will lead to civil unrest in the future if it's not fixed. I can almost guarantee you that it will lead to civil unrest, particularly for in France. Anyway, so thank you for that, Stu Percy. And to be honest with you, I'm not even thinking about buying investment property right now, because I do think the difference between property growth over the past 40 years and wage growth, it's just not sustainable, and something has to change. And do you think wages will grow significantly? No, of course not. So it has to be property. And so I think there is a chance that property may not pull back, may not decrease, collapse. It might just go sideways for a decade, maybe 2 decades. And if that's the case, property is a horrible investment, because the whole reason you get in property now is not the rent. It's not that. It's minuscule. It's the capital growth. It's the growth in the value of the property. That's why you would get into property. That's it. Anyway, thank you. So whole big rabbit hole I could go down. Scott, Codan is good too, though. One of my favorites on the ASX. Yeah, I should not have traded out of Codan. I did trade, took my profits. I should have maintained a position. So let's have a bit of an update with Codan. Some beautiful looking charts. I bought Codan, I forget when, way back in 2023, start 2023. Beautiful breakout, downtrend from about $19, went all the way down to below $4 at one point, and then moved into an uptrend. This is a beautiful shift in sentiment, shift in trend. Study this chart, and you can learn a lot. And I think I would have put this line here, this little line here, and I think I would have bought on this breakout. That's what I think. In April 2023, and then I took profits. I forget when, but that was a bad decision. And a beautiful chart. Beautiful chart. When did I take profits? I forget. Was it here? I forget. Anyway, what can you say? It's moving towards its all-time high. It's only $3.50 off. It's been a four-bagger since since its lows. Codan. And that's all I'm going to talk about when it comes to Codan. JGW3786, Amplia, Zoom, ATX, upcoming results October. Very true, may see pullbacks before results. This one came up, was it yesterday or the day before? ATX fast track, FDA fast track, was that this one? FDA fast track designation for namafortinib. Chart looks pretty good, and there was a pullback. And so this was 3 weeks ago, this comment. Without doubt, there was a pullback. And yeah, beautiful pullback. So it went from 15 cents down to 9 cents. And then not big volume coming in yesterday. Anyway, so that's nice bit of a coincidence that Amplia had this nice announcement yesterday, and now we have this comment from JGW. Myself outside top 20 holders, just so a bull always adding. Okay. So obviously, here's an interesting thing. So obviously, JGW has high conviction about this coding, and that's very important because conviction matters. I don't have conviction about Amplia. I don't know much about this coding, and it's very hard for someone to have really high conviction to sort of share the conviction or give their conviction to other people. You could try to sell the company, but even that may not work. So we all have different convictions when it comes to company. Someone's going to have really high conviction about company. And if you had really high conviction about the company, there is also an argument that maybe you should have a large position of your portfolio in that company. Technically, I don't ever have large convictions about any of my holdings. Never. Because I just know there's so much uncertainty about the future. That's just the way I think anything could go wrong. So I would never be highly concentrated in a few positions just because there is risk and I just don't have that confidence. So that's just me. And I think everyone's different. And obviously JGW has some high conviction about Amplia. And if he's been adding recently, it's done a good job. But before that, the share price was in a downtrend. Look at that downtrend. We've got to have to auto fit. I hate why do I always have to do that? Share price had been a downtrend and now it looks like it's breaking out. And yeah, so thank you, JGW. Oh, another one from JGW. Reasoning for bull position in company. So this is maybe his reasoning for Amplia. So again, he's trying to share his conviction. And this is not a bad thing. Why are you bullish on this company? But just because you're sharing your conviction doesn't mean I will take this on board and have a similar or gain similar conviction than you. In fact, I'd say it's going to be almost impossible for you to do that with me. But maybe some other people could read this and go, it's a good point. I'm going to buy some shares. And then keep on buying shares. Anyway, follow the smartest person in the room. It's co-CEO of Telix, was CEO of Amplia. That's interesting. Before taking on the beast at his Telix, he added in a recent capital raise, and when his Twitter handle was public, he always thumbed ATX News. That's a nice little comment about the co-CEO of Telix. There is actually some wisdom in this. Follow the smartest person in the room. And if you do follow individuals, if they're very successful in what they do, that can be a really good investment strategy. So you follow anyone or someone who moves from place to place, particularly if they're very successful when they move from place to place. But a lot of these successful people have taken time to be successful. I doubt there would be a successful individual who was successful from the get-go. It's a tough business, particularly if you're building a company. Tough business. And another comment from a JGW. Smart, stupid, risk, reward, boom, bust. I prefer to follow there you go, smarter person, then go on my own research journey. A complete response in 1 or 2 patients is the unicorn. Partial responses are the company's bread. Thanks, Kay, for the air. Your comment section should be a new home for banned hot copper free speakers. So do people get banned from hot copper? There you go. Yeah, so obviously JGW is highly positive, has higher conviction when it comes to Amplia, and he could be right. James Dean died in 1955. Thank you for my insightful video. APA and Infratil are my picks for long-term holds. Should I have a look at both these companies? Let's have a look. The charts, just the charts. That's it. And I have a feeling one chart, not so good. This is APA Group. Has bounced off a support level at 720. Yeah. Bit of selling coming in on the 19th of September. Oh, it's only down 1%. It looks worse than that. And it sold off during the day. It's in a downtrend. This is an infrastructure company, I'm pretty sure. And I would thought what's been happening the last week or so should be beneficial for this company. Long term, I think I had a look at this company recently. Long term, yeah, you can see the bounce off the long term. Yeah, that was the 2017 lows. Okay. Yep. And the other one was, at this point in time, I'm not bearish or more bearish than bullish, but the very fact it's bounced off 720 would be a good sign moving forward. Infratil, on the other hand, has had a really good run the last few weeks. Yeah, last few weeks. It's gone on a massive run the last few weeks. The market has become really interested in this company. And longer term, no complaints. This is actually a really good looking chart. Really nice looking chart for Infratil. This is definitely an infrastructure play. And they're also in it. Look at the volume too. Look at the explosion in volume since June, May, June. And what this has to do with data centers. Just massive volume coming in. Anyway, can't complain about Infratil. You can complain about APA, but definitely not Infratil. Looks pretty good. Thank you. James Dean died in 1955. Nisha, new follower here. Welcome. Really enjoying your ASX reviews. Very insightful for myself being a new hobby trader or gambler. I would not say, unless you're talking about gambling like normal gambling, I would not say trade. Yeah, would you consider trading gambling? No, I think it's not. I actually would not say it's gambling, because when you go to the casino, I'm going to just assume that's a normal type of gambling, or maybe betting on the horse racing. The odds are not in your favor. But when you do learn trading, you can actually make it so the odds are in your favor. That's the whole point, turning the odds into your favor. And definitely, if you do develop and generate rules, trading rules, you can be profitable and be highly profitable by turning the odds into your favor. And that's why I do like the philosophy of letting your winners run, sell your losses. That you minimize your losses, you let your winners run. And if you do that and follow that one rule alone, I know some people have difficulty selling their losses. So share price if a company's down 10%, you got to take your losses. And a lot of people also have problems of letting their winners run because you want to lock in those profits. But just think about it this way. If you have a rule, and I do use this rule, if you sell out of your losing positions at 10%, you minimize your losses at 10%, and you let your winners run, your maximum gains could be 100%, 200%, 500%, 1,000%, 10,000%. Just think of that. All you need is a few winners, and you're going to be profitable. And in that respect, I don't think it's gambling, because the odds can be in your favor. The other thing is, when you're gambling, it's not in your favor, and you're either going to be a loser or a winner. And then the opposite side is going to be a winner or a loser. When it comes to trading, everyone can win. We could all win. In fact, over time, we're all winners. We are all winners because the market goes up over time. I know. Gone a bit of a sidetrack there. Looking at the growth of MoneyMe, Zip, Latitude, Credit Corp, and Square, although it's now Block. I just see the ticker code SQ2 and think Square, they changed the name. It makes sense. Square is two-dimensional. A block is three-dimensional. So they're saying we are now a three-dimensional company. Anyhow, combine it in comparison to the 5-year and then the growth in the 6 and 1 month. Well, wait. Look at the growth of these companies combined in comparison to the 5-year and then the growth in the 6 month and 1 month marks. Your thoughts? Okay. So you're talking about the company financials. That's what I'm assuming you're talking about here. The growth. So I always look at growth. In my opinion, this is just my opinion, growth is the most important thing. And when I'm talking about growth, I'm talking about revenue growth first. Then I look at profit growth, that sort of thing. But revenue growth is really important because if a company can't grow its revenue, then how is it going to grow its profits? And the only way it can do that by if you don't have revenue growth, then how can they grow their profit? Is by either growing their margins or increasing margins or decreasing their cost base. And both of those are finite. They can only do that for so often. But a company can grow their revenue infinitely. A company right now could have revenue of $1 and in 50 years' time could have revenue of $1 quadrillion. That's possible. That is actually possible. So revenue growth, in my opinion, is the most important thing when you look at a company. If I see a company that can't grow their revenue over a 10-year period, that is a red flag, a massive red flag. Over a 5-year period, even looking at revenue growth over a 5-year period can be quite insightful. So if a company can't grow their revenue over a 5-year period, let's have a look. I'm going to look at NAB. Why not? I'm sorry to pick on NAB. I'm assuming this company has not grown their revenue over the last 5 years. Could be a bad assumption. Let's have revenue. So here we go. Slightly, this is a 10-year period, slightly growing the revenue over a 10-year period, but over the last 5 years, they have grown. But just look at this. There's not much growth there. And there's periods of time where the revenue has actually dropped. And so, in my opinion, National Australia Bank, or NAB, is not a growth company. Without doubt, it's not a growth company. In fact, a better one is Telstra. I can almost guarantee you this company has dropped its revenue over the past 10 years. It's dropped its dividend. And so let's have a look. Yeah, so this is Telstra. Actually, this is operating revenue. Was the same as Total. So this is Telstra. It's pink. Revenue back in 2015 was 25.5 billion. Now it's 22.9 billion. Now, maybe the company has made some divestments, and that could be a reason why. But this is not the sort of company I would invest in. This is not the telltale signs of a high-quality company. And I have heard some people call Telstra, Woolworths, or the NABs high-quality companies. In my opinion, they're not, because they're not growing. So this is one of my first things I look at when I research a company. Are they growing their revenue? So looking at the growth of MoneyMe, Zip, Latitude combined, and then comparison. So you're looking at all those 5 companies together 5 years ago to now, and then the growth in the last 6 months and 1 month. Okay, you must not be talking about revenue because you're looking at that 6 months and 1 month. Not exactly sure what you're talking about here. So you're talking about the share price. So you're looking at 5-year, then 6 months and 1 month. So you are looking at technicals, looking at moving averages, that sort of thing. So let's have a quick look at these companies. So I'm not exactly sure what you're talking about here. So MoneyMe, this is easily. I've talked about this a few times now. So this does go back. In fact, it doesn't even go back 5 years just yet. So this looks pretty ugly over a 5-year period. But if you hone in on the last 6 months, definitely share price has found a floor. Share price going sideways. Last month, share price is moving into an uptrend. So it all depends on your perspective here. 5 years looks ugly. 6 months, it's getting there. Last 1 month, this is starting to look pretty good. So that's what I'll do. For these companies, I'll look at the chart, Zip, and same thing with Zip. I would assume if you look at the 5-year, well, actually 5 years ago, the share price was higher than it is now. So if you look at the 5-year period, you're going, oh, I'm not sure. Share price is a little bit lower right now. But if you hone in the last 6 months and 1 month, well, it's pretty obvious. In fact, yeah, share price is in an uptrend now. There's no debate about this. Share price of Zip is in a well-defined uptrend. A lot of positive sentiment around this company, a lot of positive thoughts about this company right now. So there's no debate about Zipco. So again, it's all about your perspective. Latitude. I don't know about Latitude. I have a feeling this one's going to disappoint on the shorter term. Yes, there's no doubt. Well, longer term, 5 years. This has not been around for 5 years. And in fact, since this company listed, this chart looks awful. Awful looking chart. Even honing in last 6 months, 1 month, it's not as ugly. So 6 months share price has dropped. Yeah, 6 months was March. Oh, share price hasn't dropped. It's going sideways. We're in a consolidation period for Latitude. So I don't know why the chart looks like this. Share price is almost going exactly sideways. You'd see no growth in share price at all. It's trading in a range between $1.13 and $1.17. This looks like a company that has been bought out or there's a takeover bid, but share price hasn't popped up. Weird one for Latitude. I'm going to move on because I have no idea what to think. Credit Corp. This is probably a neutral. I'm probably neutral on Credit Corp right now. So 5 years. The other thing I do with 5 years, you can see how the share price has moved over a 5-year period. And if the share price has been an uptrend, that could be a sign of a high quality company. I tend to look at the longer term chart when I'm thinking in those terms. So for Credit Corp, if you go back to like 2012 and 13, there was some signs here that this was a high quality company. But over the last 5 years, the share price of this company has done nothing. And then let's just hone in on the last 6 months in 1 month. And share price actually dropped over the last 6 months. And I'm neutral on this. Share price really going sideways, not doing much right now. And the last one was Square or Block. This one is all over the place again. And again, you can't really look at or I suppose you can look at Block on the NASDAQ. And let's do that. We'll look at Block on the NASDAQ. And if you look at the last 5 years, back to 2019, weirdly enough, back between 2018 and the COVID-19 financial panic, share price of this company was just consolidating, going sideways. Then we had the hype period, share price dropped back down. Now the share price is going sideways in this same sort of trading range than it was back in 2019. So the share price of this company has done nothing from 2019 to now. But during that period, share price actually was almost a four-bagger. You could have bought at the lows and sold at the tops and had a four-bagger. But if you bought in 2019, you're thinking nothing's changed over a 5-year period. In the past 6 months and 1 month, meh. I'm just like, meh. So I'm not sure what you're exactly talking about, Nisha, but that's my thoughts. I'm stupid sometimes, so I've definitely not helped you at all. Nice says or asks, how do you decide to take a late position in a stock that has already broken out some months back? Sometimes I go, I've missed this one. For example, you took a position in Nuix after it had broken out earlier. You bought and sold it after that. Because many companies do that, have repeated share price increase when they are in an uptrend. Nuix, I'm not sure if you got exactly right. So I've traded Nuix twice. The first time I traded Nuix was here, back in July 2023, sometime here. On the 20th of July, share price rose 36%, and that was a bit of a signal for me. And I bought soon after that, within a day or two, if I remember correctly. So I sort of bought on the breakout here, and then I sold for some reason after that. And I should have sold because the share price wasn't an uptrend. And then I bought on this breakout here. So unless you say 6 days later is waiting, so what'd you say? For example, you took a position in after it broken out earlier. I'm not sure if buying 6 days later is a late, or I knew it broken out. I expect the share price, not expected, but I was looking at what the share price did after that. Share price went sideways. In my opinion, when the share price goes sideways, that's quite positive, and that's why I took a position at 294. I have not sold out yet of this, and I'm a little bit not nervous, but I am cognizant of the fact the last few days the share price of Nuix has really taken off, but the volume has really increased. So if I wasn't looking at the volume, I'd be a little bit more nervous about what the share price has done, but the volume is an explanation of that. It could be fund managers are going, this company is looking great, got to take a position, and they're fueling the share price rise. Anyway, so I have not sold out of my trading position in Nuix just yet. It's up. Oh, it's up over 100%. Bought at 294, now at 620. Ooh, there you go. I was actually a little bit going, oh, it looks quite expensive at that point. Yeah, anyway. So it all depends. You bought and sold. Yeah, haven't sold it. Did buy it after. Do they have repeated share price rises when they are in an uptrend? It's true. It's true. In fact, you can see this with Nuix. So when I bought, share price actually went sideways for like a month, and then there was another rise. The share price went sideways for another month, then another rise. In fact, you can do this. Buy when the share prices rise. When you see the share price go sideways, buy there, and on the expectations, the share price will go on another run. You will always see these sort of price actions. Share price pop up, go sideways, pop up, go sideways, pop up, go sideways. And that's actually really healthy. In fact, after Nuix released their results on the 19th of August, we had 2 good days, share price went sideways, and now another rally. So Nuix is showing this telltale sign, sideways, up, sideways, up. So I see this a lot. And sometimes when you do see a breakout, share price can go sideways for 2 months, 3 months, and then the share price will keep on going. I think Nuix, Neuron Pharmaceuticals is like that. Way back when I bought, I had to be a little bit patient with this one because I bought here. Here it is. I bought it $3 or something like that on the 7th of December. And share price briefly went below my buy price in January. But you can see share price really did nothing for about 7 months. You could have bought Neuron Pharmaceuticals at 340, 350 7 months later. And then, so this was also, there was another breakout for Neuron back on 25th of July. I'm not sure, there was big volume on that day, higher than usual volume. That was another breakout. So I could have bought more, added to my position on that day. So you do see this a lot where the share price goes sideways, pops up, and that's really healthy. It's taking a breather. That's the way I look at it. It's taking a breather. And because the share price is not dropping, it shows you that the sellers, the shareholders, are not enthusiastic to sell. They're not enthusiastic to take profits. That's a good thing because eventually there will be some buyers who come in or some investors who come in going, oh, this company is interesting. And then you'll see the enthusiasm of the buyers increase, and that's why the share price will take off. And a lot of times you will see the share price take off when it hits the moving average. What's an example? Maybe Superloop? Maybe? Yeah. In fact, we see it quite a bit with Superloop. This shorter term moving average channel is a good support level. So it went sideways for a while, then hit the moving average channel. Sort of, share price was sort of going up at the same rate as the moving average channel. See a little bit of a dips and take off, a little bit of a dip. This was could have been a concerning dip, but then it took off on the 23rd of July. So the shorter term moving average channel is acting as a support level for this company, and the share price is riding that moving average channel. So when you see that stop happening, that could be a sell signal. Very interesting. There's many things you can do with technical analysis, and that's why people who say, well, if technical analysis worked, everyone will be doing it, and then it wouldn't work. Andrew Page has said that a few times, and what he doesn't understand is that technical analysis is so broad. There's so many things you can do that no one else is doing, and that's why it can work and does work. That sort of thinking that if it worked, everyone will be doing that is just really short-sighted and, in a way, fairly ignorant as well. Hopefully I've answered your question nice. The RCK under Hey, Kneppy, what do you think about SKS long-term investment perspective? Long-term. So I am in SKS right now. Let's have a little chat. They've released a few data center contracts recently, and chart looks okay. Long-term, I've actually thought about this, and I actually think SKS Technologies has significant tailwinds behind it, really strong tailwinds. What's the strongest winds we can think of? Maybe the storm on Jupiter, maybe solar winds. I have no idea. Solar winds is not a wind, is it? It's a flow of electrons or something. I have no idea. Don't listen to what I'm saying right now. Anyway, so there's really strong tailwinds behind it. The only way they can't be successful right now with these tailwinds is if they really screw up, like the CEO saying, well, we are thinking about doing capital raising because that's what the investment banks want. That was a pretty silly thing to say. But I think eventually these tailwinds will start to weaken. Don't know when that's going to be. They're really honing in on the data center thematic, the AI data center thematic. And eventually that thematic will play out and these tailwinds will weaken. So I don't necessarily think SKS Technologies is a longer term play, because if you take away the data centers, this is a pretty, I don't want to say mediocre company, but I did have a look at this company before this data center thematic became a thing for this company. And I had a look and I went, I don't know. I just don't know their business model, like a audio visual refurbishment company. But if they can turn this thematic and diversify the company even more and find other ways to really grow the company, maybe this company is a longer-term thematic or longer-term company. So at this point in time, I can still consider this company to be a trading stock, not a high-quality company. Not there just yet, but it can change. But at this point in time, I'm just trading SKS Technologies. Hopefully that has answered your question. Roger, close the loop. Okay, holders on hot copper are concerned about the levels of debt. I don't know much about close the loop. One thing I do know is close the loop is talking about becoming a circular economy. So you use stuff and then it just, so I don't know. It's like a hippie company or environmental company. And obviously that sort of way of thought is actually really good, that we try to use everything and just keep it in the economy. We don't throw, like when you throw out stuff, it's always thrown out. It gets put to the dump and then put into fuel, and it's always going to be there, particularly plastic. Anyway, so the ability to use everything efficiently and effectively for many, 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 many years, decades, centuries, that sort of thing, is something we probably should need to transition. Now, one thing I do know about close the loop, it is highly acquisitive. Maybe that's being a little bit unfair on the company. And the concerns about the levels of debt probably supports my thoughts that this is a highly acquisitive company. So either you increase debt and or you raise capital, dilute shareholders. I'm not a fan of that. I do prefer organic growth. And hopefully most of you prefer a company you own to have organic growth. That's the greatest way to grow a company, organically. But there are a lot of companies out there who rely on acquisitions to grow their companies. And sometimes it's hard to know. It's hard to know whether a company is growing organically or it's just growing because of acquisitions. Some companies will say, well, we had 20% acquisition growth, or 20% of our growth was acquisitions. The other 80% was organically. And I really like when a company does that. Anyway, and not only high levels of debt, reliance on one customer, HP, and general worries about the level of intangibles. Considering the options in the circular economy, maybe they need to focus on somewhere like India, where electronic waste is growing 30% year on year. If it bottoms out, it could be a good pickup for longer term growth. So good. I have not had a look at this company. And I don't want to be unfair to hot copper, but some posters on hot copper are questionable. But if these are holders talking about their concerns, that's actually a good thing. I like when holders talk about the concerns about the company, because they're a shareholder. But yeah, I do like that. Anyway, the chart for close the loop is ugly. That's one thing I do know. So even though I don't know much about close the loop, I do know the chart is ugly. This is an ugly looking chart. Share price broke down, not up, broke down on the 26th of August. So this would have been their results. When the share price breaks down on results, that's not a good look. The share price has kept on falling. Down at 20 cents now. 20 cents now. Yeah, so this is nowhere near on my radar just yet because of the chart, and I have not done anywhere close to meaningful research on this company. So thank you for those thoughts and remarks in regards to Close the Loop via Hot Copper. It's always good to know little things like this, particularly companies I don't know much about. Adrian is a happy owner of Aussie Broadband and Chorus. I don't think I need to look at charts for both of those companies. Actually, I will, because I'm pretty sure the charts for both companies look really good right now. No, I'm not going to do it. No, I am going to do it. I am a shareholder for Aussie Broadband, but not Chorus, and Aussie Broadband looks much better now. There was a bit of a sell-off because, was it July? Because of a profit downgrade. It was not a profit downgrade. They were building this new stupid low-cost internet providing thing, whatever it's called, Buddy or something like that. And to build this, they had to spend a little bit of money, and that meant their EBIT was down from their previous expectations. And to me, that's not a profit downgrade. They've shown you why the expectations have decreased a little bit. And the market sold off. I think it was one of the dumbest sell-offs I've ever seen from the market. And I did take advantage of that. I do like being opportunistic, so I actually bought more shares in Aussie Broadband below $3. Or maybe it was right on $3. Now the share price is $3.86. So already that position is up 30%. So I'm not disappointed with that. And the chart looks pretty good. It was starting to look good. We did see a share price at these levels for a long time. So that's one thing I don't like. Chorus, for some reason I have a feeling this looks really good. It's really taken off. Yes. I don't know why I remember that for Chorus, but the share price has really taken off the last few months. Would it have been an all-time high? Oh, it's close. Oh, look at this. Technical analysis does work. You put a line right there. The highs this company saw back in 2020, and looks what's happened. Share price hit those levels and now has pulled back. Investors know. They know this company got to a price of $8.50 back in late 2020. Maybe subconsciously know, but they know. And as soon as share price got to these levels, sell off. So again, $8.50 would be a really good really good breakout level for this company. And it's a resistance level as we speak. As I speak, you're not speaking. Forest Hill, if you do a revaluation of John's Lyng Group, can you please make a short video about that? I probably will do that, so I'll move on. Oh, this is when the JLG or John's Lyng Group released a pretty negative report. Okay, so George has an opinion about John's Lyng. I'm a John's Lyng shareholder, and I think it's still a decent growth pick for one major reason. That is climate change. Okay. John's Lyng Group fixes stuff up for insurance companies after an event, egg, flood, fire. These events are most certainly going to be more common in the future. I think that's an almost certainty as the climate warms and Australia is particularly vulnerable. And as these events become more common, the market, John Lyng's Group, is insured to grow, and so will John's Lyng Group. I can't push back on that. I think without doubt, with climate change is happening. There's no argument. This is not something you can have an opinion about. It's happening. And one of the things I get upset about when people say, climate change is not happening. They're not experts in climate. That's my biggest problem. You are not an expert in climate. You should not have an opinion about this because all the science backs it up. Just listen to the science. You can't have an opinion. Don't listen to, what's his name? Alan Jones. Alan Jones was that, was it in Sydney? And he was an anti-climate change. And people listen to him. Why? He's not an expert in climate change. He knows nothing about climate. Climate change is happening. But one of the things we don't know about climate change is how we're going to be affected. But more than likely, we're going to see more extreme events, particularly floods. I think we are underestimating how much more flooding we are going to have. And over the past few years, we haven't seen as many significant weather events in Australia. And I think that's going to change. Anyway, so So George VV50K definitely has a longer term thematic when it comes to John's Lyng's group, and I can't push back on that. Brendan Walker, thanks for the preview on Tasmea. Got shafted on Pilbara when it dropped, so been sitting on them waiting, only starting as an investor. Sold Pilbara at 306, took loss, jumped in at Tasmea 176, Pilbara down 8 cents, Tasmea up 8 cents. Cheers. After all, this company is like a mini ETF income from different streams. Okay, you got in at Tasmea better than I did. I have not taken Tasmea just yet, but it's definitely a company I'm interested on. Not so interested on Pilbara just yet. So have a look at charts of both companies. Just the charts, not the companies itself. Have a look at Pilbara first. So Pilbara is a company I will be keen on when I do see a bit of a change in the sentiment when it comes to lithium. Not quite seeing that just yet. Now, we did see a bit of a run in Pilbara, probably other runs in other lithium companies, but that's not a change in sentiment, not a change in trend. You can definitely see that. Just a little bit of a run, that's about it. And otherwise, Pilbara is in a down trend. Current share price is 279, and you sold at 306, so share price is down a lot more in Pilbara than when you sold. So at this point in time, it's a good decision. We just don't know how much further Pilbara Minerals could fall. The other question I would have about this company is, what's the value? Is there any value in Pilbara Minerals at current prices if lithium prices don't drop? That's another question I would have. I don't know. Don't know the answer to that. Now, on the flip side, Tasmea looks really good. Oh, and it looks even better. Okay, so this one really hit my radar on the 26th of August when they released results. And I should have bought on these little pullbacks. I could have got in at $1.70, just like Brendan Walker did. And I was being a little bit too cute. I just wanted to say, and this chart looks absolutely spectacular. Not expensive. I do like this company, and this chart looks pretty good. This is the sort of chart, evolving chart, I like to see when we do see companies that have recently listed on the ASX. I did this with IPD Group. I try to refrain buying companies that have listed on the ASX within the last 6 months. Tasmea did it, was it in April? So we're still not 6 months, but they have released financial results. And one of the only reasons I will buy into a company that is just listed on the ASX is if they do a profit upgrade. That's what IPD Group. No, this is different. No, this is completely different. For some reason, I thought IPD Group had dropped. Let's go back to another company. We'll go to Shape, since I'm trading Shape right now. In fact, Shape, Doug, Duratec all had similar setups. So they all list on the ASX. Share price dropped, and then a turnaround. So this is Shape. Listed, share price dropped, turnaround. This would have been well into like 1 or 2 years into their listing. So not quite Tasmea. Duratec is a little bit further back. Not much excitement for about 2 years. Share price broke out. So again, a little bit different than Tasmea. And Doug, another similar chart. Listed, not much happening, and then the breakout 2 years later. So Tasmea is a little bit different. This is a really early breakout. I'm trying to think of another company that has done this. Share price dipped a little bit after listing, and then share price is moving to an uptrend after the company released their results. So yeah, they listed on the 29th of April. So not quite 5 months ago. Yeah, 5 months ago. Yeah, I like this chart. I do like this chart. Tasmea. Thank you, Brendan. Good work. Good work, Tasmea. Wish I jumped in. Big Boy Baby, do you reckon there is a possible bounce on support for Laserbond following the drop after earnings? Okay. Have I talked about this? For some reason, I liked it. Gave the comment thumbs up. Typically, if I give a comment thumbs up before I get to it, that means I've already talked about it. But I can't remember doing that for this question. I have a pretty good memory. This chart looks pretty ugly. So no. In fact, we just seen a bounce now, but the chart looks ugly. I was a holder and I sold on their February results. I didn't like the February results, sold on that. Share price went sideways after that. And then they released their results in August. Share price has dropped. So definitely I will be maintaining an eye on this company because I do like their business, but right now is this company is of no interest to me. And you can look at that, see that weekly chart. Beautiful uptrend, and now the company has moved into a downtrend. And the last time the share price was this low was back in late 2020, early 2021. So the company has to show me something now. And maybe this, or maybe my reply to your comment is a little bit late because we've just now seen the bounce. Ooh, what's this? Oh, Big Boy Baby says, I miss your individual. Oh, this is when I was, okay, I think I might have asked about this. Miss your individual company videos. Always good to learn in more detail about specific businesses. Okay. And then George, I agree, these daily rundowns, how I have a glance at and see if any stock I own are mentioned, but those in-depth videos were great for finding new companies, might have otherwise never considered. I will take all this on board. I have taken this on board. I will do a few of these standalone videos, but it all depends on time because I really like these ASX Daily Rundown videos, but I do want to, on occasion, do these individual company videos. But again, they get way less engagement than the Daily Rundown videos because I do like the ASX Daily Rundown videos over individual companies and they get more engagement. I do prefer those videos. That's just me. But I am listening. I'm listening. Nice. Such a treasure trove of information. I'm not sure about that. There's a lot of stuff I don't know. What do you think of Adore Beauty? Right now, not a fan. The business, not a fan. I'm assuming the chart, probably not a fan. I do look at this chart every week. That's it. Unless I see something really interesting. Now, share price is going sideways. So share price was in a downtrend. It's going sideways. I'm saying the share price is consolidating right now. A little bit of volatility in there, but there's no trend. There's no excitement in this company. Either way, share price going sideways. Since I'm not a fan of the company itself, what sort of moat do they have? That's probably my biggest question. What advantage does this company have over other companies? I don't even think they sell their own products. They sell other companies' products. Sort of like Satire. I don't like Satire's business model. And this is sort of a similar thing where they're selling other people's products. Anyway, so that's my thoughts on Adore Beauty. Now, I could be completely wrong. I could be absolutely wrong, and this company has a really good business model, and I just don't see it. And that's very important to know when you might be wrong. And I could be wrong on this, and if I am wrong, I will change my opinion. And it's very important, the ability to change your opinion. Something a lot of people don't have. They stick to their beliefs, stick to their opinions, and when those opinions are questioned, they get very defensive. I really hate that. A bit of a random jump in Resmed, and there was a random drop in Resmed the other day because something about Eli Lilly, I don't know. I'm just going to have a look at the Resmed chart because this was another opportunistic buy I had. Never bought Resmed, and then when these fears about Ozempic, or it's called, affecting Resmed happened in this time last year. In fact, in September, around this time last year, the share price reached a low of about $21. Share price now is 35. So we're talking about a 67% increase in share price in 1 year. So these opportunities things happen on occasion. So when the market is panicking, and the market panicked here, this is an absolute brilliant case of the market panicking and overreacting. And I do know a lot of people took advantage of this. I just don't know who was selling. So institutions and fund managers would have been selling. I don't know why. So I forget where exactly I bought some shares. I bought half my shares for the long term, half my shares as a trading position. I have not sold my trading position in Resmed just yet. And then there was a little bit of a 28th of August. Yep. There was a nice little jump in share price of Resmed, 5.6%. And then the other day, there was a drop in share price by 2.5%. Some of this might have been noise, but overall, the chart looks pretty good for Resmed. I have no complaints about this chart, but I am thinking maybe I should take my profits in my trading position because my position Resmed has now increased significantly since I bought in because share price has increased a fair bit. Anyhow, Gavin Stevens is talking about why there might be a lot of interest about antimony. And I've noticed so many companies are talking about their antimony hits over the past few months. So apparently, according to Gavin Stevens, and I have no reason to doubt him, but again, I have no reason to say this information is 100% factual because this could be, Gavin Stevens could be, he could be a Russian infiltrator or Chinese infiltrator trying to spread false news. We just don't know. Anyway, so China ban on exports of antimony. And the thing you can do in regards to that is just Google it. There we go. On August 14, China announced export restrictions on antimony in the country's latest move to restrict critical mineral shipments globally in the name of national security. That's bull crap what they're saying. And that's why antimony is a critical mineral. And that's why we're seeing a lot of announcements about it. I can definitely understand why companies might be interested in antimony. Commences September 15. There you go. Wrong. Well, who's wrong here? This says August 14. Oh, wait there. No, you're right. Sorry. The limits effective, this is from CNN, or CNN could be wrong, says September 15. So we have two sources here. Now, interesting enough, so we have Gavin Stevens as a source. We have CNN as a source. Well, there's a chance that Gavin Stevens got his information from CNN. So if you get your information from another source, then you could be wrong. So me saying there's two sources here actually could be wrong. But I would assume you're right. There's another September 15 from AFR. Anyway, so we have now confirmed that Gavin Stevens is right. There is a China ban, although those articles weren't talking about bans. They were talking about limiting and restricting. Okay. Impose export controls. Reuters says export controls. So maybe a ban is the wrong word there. Critical metal for defense used in ammo manufacture. China and Russia control global antimony supply. I can absolutely understand now why there has been so many announcements, ASX announcements about antimony. This all makes sense. Thank you, Gavin Stevens, about that. Although I did notice in a few announcements they did mention antimony as a critical metal. Was it a strategically critical metal? Ben Hutchinson has City Chic. What's the word? City Chic hatred. Maybe that's not the word I was thinking of. I'll be passing on City Chic. Fool me once, shame on you. Fool me twice, shame on me. It's nice saying. I'm just going to push back for pushback's sake here. I have made some investment decisions in the past or trading decisions that have not worked well when it comes to a company, but that has not stopped me from taking advantage of the shift in sentiment or shift in trend in the company. So I will try to leave my bias against a company out of it. It is hard. A really good example. What's a good example of this? I'm trying to think of a company I bought. This didn't turn out. A trade I made that didn't turn out well. Now, a great example of this is probably actually a great example is Nuix. Great example of this is Nuix. I took a trade in Nuix, sold, took profits, and then I took another trading position when share price was significantly higher. And this is sort of, it's weird to say it, but it is in the same sort of ballpark because I made a decision. It was a bad decision. And I wouldn't say I'm furious about that decision in regards to Nuix. That'd be really unfair because it's my decision. I want to take ownership of my decisions. And I won't let that decision sway any future decisions I have if I get a signal. I'm trying to think of the complete opposite. When I sold out of a company or bought a company, share price dropped, and then I bought back in. I'm trying to think of that happening. I can't think of one offhand, but it is hard. And this is not only in investing, this is in all facets of life. I do play some fantasy sports just because good time waster. And so many people will trade one player 1 year and say the next year, I would never buy that player again. Screwed me last year, never happen again. I think that's pretty limited way of thinking. Anyway, I'm not saying you're limited, Ben Hutchison, and for City Chic, I can sort of understand you there. But if they turn things around, this company could be cheap. If they turn around, I think there's many ifs there. I'm just going to have a look at the chart for City Chic. You just see the share price. Wow, this is an ugly looking chart. Share price has dropped from a high of almost $6 down to 12 cents. And we saw the share price take off on the 28th of August and has pulled back. That's not a breakout, in my opinion. There's just too much uncertainties about City Chic just yet. Anyway, James Dean died in 1955, says NextDC is trading 50 times EBITDA at 19% CAGR. Feels like 1999 tech bubble. Everything has to go right for the share price to stay. I did like Rudy Villapic say, or comparing NextDC to Transurban. And when he mentioned that, I was like, oh, yeah. So Transurban was building up its infrastructure for many, many years. And you can see that in the chart. No, I have to look at the weekly chart because it's doing nothing now. Building up its infrastructure, and the share price kept on rising, and now it's going sideways. And I think that's what NextDC is doing right now. They're building up the infrastructure, and eventually they will have significant infrastructure, and I think the cash flow will just come flooding in. But there's a chance they could just keep on building the infrastructure. That's the way to look at NextDC right now. And they're in the right thematic. But again, I'm not sure how much longer the thematic has to play out. Everything has to go right for the share price to stay up. I'm not sure if everything has to go right. But yeah, I can understand that. Things will definitely have to go right. But because of these tailwinds behind the company, there's greater chance that all the things will go right for the company. For a while, anyway. Ruben, the fact Tabcorp is losing money is a huge win for Jumbo Interactive investors. This gives Jumbo the leverage to sustain margins or walk away, which threatens Tabcorp's revenue if the renegotiation fails. Both companies, I won't talk about this Tabcorp versus Jumbo. I don't know companies well enough, but one thing I do know is both companies' charts look pretty bad right now. So neither are benefiting from anything. So we'll start with Tabcorp. Share price did bounce up yesterday because of a restructuring of their board or something. But the chart looks pretty ugly. There's no way you could look at this chart and say, it looks pretty good. You can't say that. The only thing you could say is 40 cents. It's bounced off that. That is a support level. And maybe there's good value in the company. I don't know. And Jumbo has bounced off a support level. Oh, no, it hasn't. I got this one wrong. So Jumbo is right at support level as well. That's what the old lows we saw back towards the end of last year, start of this year, and it's doing the same thing. You can see the share price just remained above $13.20 for a while last year. It's doing the same thing now. Some say technical analysis doesn't work. Just see it here. You can see it in this chart. 13.20 is an obvious support level for this company. It's hit it 1, 2, 3, 4, 5 times back then, and then in the last couple of months, or last month, it's hit it 1, 2, 3, 4 times and has not fallen through. If it falls through 13.20, put it this way, the market knows subconsciously or consciously that 13.20 is a support level for Jumbo. So when people see share price is close to 13.20, it's good buying here for Jumbo. I'm going to buy some shares. If the share price falls to, say, $13, those same sort of investors or traders are going, I ain't going to buy this. No way, it's broken down. It's broken below 13.20. It's below it. Last time share price was this low was back in 2023, 18 months ago. And no, it looks pretty bad. So that's why support levels are very important, and breaks of support levels of resistance, because it changes the way or the mentality of how traders, investors think. It does change the way they think. Psychology is very important, extremely important when it comes to when it comes to everything, really, life in general, but also investing. Anyway, that's all I'm going to talk about when it comes to Tabcorp and Jumbo. Charts look pretty bad for both. City Chic EBITDA is raising a lot of red flags. They are bleeding hard and there's no future growth. I can see chart will continue to move downward. The plus size market is shrinking and other clothing brands such as Witchery are getting rid of plus size products. I'm going to have to take some of your comments in faith there. Plus size market is shrinking. I have no idea. Maybe it's true. And I have no enthusiasm to research that. At this point in time, I would not even think about buying City Chic, even if I saw there was maybe possibly a good value, because I need to see a technical signal when it comes to this company. That's what I need to see. That would be my buying, is a technical signal, preferably a technical signal on good financial news. And I think we're a long way from seeing that for City Chic. T. Bandera, love to hear your thoughts on price charts of 3 unique stocks: Highcom, Appen, and AL3MD. Did I say that right? No, AML3D, which is AL3. All tech-related, impacted by US market, including defense. Please provide a detailed view on AML3D and Highcom based on their financial. Oh, geez, this is a really in-depth question, which I'm not going to do right now. It's a way more in-depth, and okay. I don't know how much more I'm still haven't got it out of August, although I am in my ASS Down and Out videos. I'm going through quite a few of the comments. I was wanting to see. Yeah, I've got a lot to go through. Yeah. Okay. Let's go back and I will answer this one. Highcom. Okay, charts, Highcom, Appen, and AL3. Let's have a look at the charts of these 3 companies. Highcom, if I had to judge a chart of this company, it was a nice little run back in August. That run has come to an end. They did release a few contract wins, if I remember correctly. That did cause a little bit of excitement in the market. And that's what happens when you don't look at ComSec for a while. You have to. So the company did release a few contract wins back in August, if I believe. Yeah, early August, 2 in a row, and nothing since then. Just released the results. So that's the good thing. 2 good announcements in a row, and that's what caused excitement. So this company is driven by that sort of news flow, and we have seen share price pull back because I think those announcements, I wouldn't say they've dried up, but we haven't seen one released for 1.5 months. I would say this company, it's the revenue in this company is going to be highly lumpy, that sort of thing, and that's why it looks cheap. So market cap is 19.5 million. It wasn't that long ago this company had a profit of had a profit in 2023 of 6 million. In 2022, 5.7 million. So if you just look at the profit in those 2 years, look at the market cap of this company, go, this company is cheap. But again, lumpy profit. They had a really bad year in financial year 24. That spooked the market. That's why the share price is down a lot. Now, I don't think the share price has much to fall from here, because I think the upside is enough that any downside risk is sort of negated. But there's just a lot of uncertainties when it comes to this company. And that management team has been thrown out by the board. I do like that the board threw out that management team because they just were not succeeding. So I do like the aggressiveness. I do like the positive reactions from the management or the board, not the management, the board. So that's Highcom. I could definitely see an argument that this company won't fall much from here, but I think there's going to be a lot of volatility in the share price moving forward because of that lumpiness, and they could release 3 or 4 contract wins within a month period and the share price could take off. The other 2 was Appen. Appen is, I am ignoring Appen right now. It's a plaything for day traders. There's no financial reason why the share price is in a massive uptrend. They have not released anything to say things are turning around. They have not released anything at this point in time. And just the volume. This is telling me it's just a plaything for day traders. Now, in saying that, the chart looks pretty good. I can't say the chart looks bad. But I could actually envisage the share price of this company dropping or halving within a month, because that's the way things might go. The volume, though, and yeah, it does look like a good chart, but that's just a chart. Financially or company financial performance, that sort of thing, I've not seen any turnaround for this company just yet. The other one was AL3. This one, the chart has, this was the chart share price ran up because of next investors. That's it, nothing to do with the company, and that's why we saw really big volume. Chart looks okay, nothing wrong. Nice little pullback. Share price got down at 12 cents, and now it's at 15.5 cents. So no, chart looks okay. I'm just concerned about whenever a company share price has risen because of next investors, I'm a little bit skeptical. Now, the other thing I would look at for AML3D, because you did say, please provide a detailed view on AL3 and Highcom based on their recent financial reports. Okay, recent financial reports. Okay, let's quick delve into both of these financial reports. I suppose they're preliminary. What's in their preliminary final report? These companies are not profitable. So revenue for this company increased from 630,000 to 7.3 million. EBITDA negative, lost by $4 million. I do like that growth in revenue. That's one thing I did notice when I look at this company's cash receipts over time. Cash receipts are starting to increase. Now, I'd like to see a little bit more proof that the company is significantly growing, but that's a really impressive growth. 1,055% growth in revenue, but the company is not profitable, and I don't think the company is quite operating free cash flow positive yet. Just going to have a look at the most recent company's Appendix 4C. I did have a look at this company's Appendix 4C a few years ago, and I was liking it at that point. So this is the last quarter. So $1.6 million in receipts, and the company is still operating cash flow negative. Not a lot in the year, but has not hit that inflection point. And I just think at this point in time, there's a little bit too much froth. Wouldn't say FOMO, but a little bit too much froth in this company just yet to justify the share price moving up. Highcom, if you look at the financial charts, financial numbers, I would say there. I haven't had a look at this one just yet. And by the way, I'm a shareholder of this company, so that's why I said I haven't looked at these results yet, because I'm more likely to have looked at the financial results of a company I own than not own, but I have not looked at these yet. I did not expect good results. So revenue down a fair bit. Again, lumpiness down 49%, a loss of $12 million, profit of $6 million last year. So yeah, that's what you're going to see this company moving forward. And I have no confidence that this company can significantly grow over the next few years. I don't care about any thematics, because there's a lot of uncertainties about the world and the future. And I think that's one of the reasons why this company might look cheap. Hopefully that's enough for you, T. Bandera. Hopefully. GZX Becker. I bought Dusk at its peak, and now I'm down 7% today. It was cool, though. Have a quick look at Dusk, because things could be moving positively for this company. I do like this chart. Share price broke out of its long-term downtrend on the 18th of July, and nothing to actually hate about this chart over the past few months. This is like a V-shaped recovery. I'm not the biggest fan of V-shaped recoveries, but there is some strength when you do see V-shaped recoveries like this. And the very fact that they release their results and the share price has gone sideways. So share price has gone sideways for almost a month. You can still buy in this company. And I think the share price has the potential to move higher when the share price gets close to the moving average channel here. It did it back in late August. So Dusk looks interesting. Do I have this on my watch list? Yes, I do have this in my Buy Australia watch list, which I do look at on occasion. Not every day, but on occasion. So thank you, JZX Becker. So hopefully share price of Dusk will keep on going up. Phillips 5162, Clinuvel, lots of selling at close. Some people must know something because the company keeps on performing. I'm going to get into this in a second. I'm waiting for the chart to turn to buy more. Does DOC look very underpriced to you? They are reiterating cash flow positive next halve. I do want to talk about this. Some people must know something because the company keeps on performing. There is a lot of this mindset, particularly if the share price is in a downtrend and the company actually releases good things. What does a company know that we don't know yet? Or if you just see the share price drop a lot in one day, people will say this, oh, the company must know something and they're not releasing it. I never think like that. And maybe that's me being naive. Anyway, Clinuvel. The company released their results, and again, another company I own, and I was really happy with the results. No complaints. And the market did react nicely. It was up, 10% of the day. Share price has pulled back. What's happening? Released really good results. Share price has pulled back. We have seen this time and time again for this company. Whenever the company releases something good, share price pulls back. It could be just one big shareholder just selling out, or it could be just negative sentiment. That is all it could be. People bought at higher prices. They see the share price go on a run. Oh, I've got to sell out of this dog stock. Even though the company keeps on performing, it's a dog stock because that's the mentality. When a lot of investors see the share price drop after they bought in, oh, this is a dog stock, I'm going to sell out now. And that's all might be happening for this company. So if I was just trading Clinuvel, I have no interest. No interest. And there was another comment you said, I'm waiting for the chart to turn to buy more. Okay, yeah. In fact, I'm doing the same. If I see a signal here, and I believe Clinuvel might be really undervalued, it says PE ratio of 21.4. If the PE ratio of this company is 21.4, this is or has a potential to be really undervalued. And could be another case of a share price of a company not doing anything for many, many years, and eventually you look at it and go, oh, geez, this company is cheap. So back in 2019, I probably wouldn't have said that. This company is quite expensive. Now I could be saying this company is cheap. Now, you notice there's a really good support level for this company, and that support level has been underpinned by the COVID-19 financial panic back in 2022 and March of this year. Let's go back to the daily chart. And yeah, the share price at $13, it just bounced off it recently, or very close to there. So $13 is a very important level, but I need to see something in the chart, which would tell me that the sentiment is shifting and maybe all these sellers have left the party. And what's the other one you looked? Stock. This one is interesting. The chart-wise, I don't know much about the company, but chart-wise, share price consolidating. I love these plays. Now, not necessarily buying just yet, but when I see the share price consolidating like this, I just know if the share price breaks out, all bets are off. You could see the share price go on a massive run. I'm not saying it's going to happen with Dr. Care, and this would be preferably financial driven. As Flip said, underpriced. I'm not sure if it's underpriced. I won't go into that much detail because they would need to become profitable, cash flow generative, that sort of thing for me to value this company. But they are reiterating cash flow positive next half. And if they achieve that, the share price could go on a run. It says market cap 24.9. So if this company comes out and they're really cash flow positive, fair profitable, maybe this is cheap. So this is a chart I do like, and that's the reason why I have this company on my watch list. I am looking at this chart. I'm looking for a breakout. And if the share price gets above $7 or 7.5 cents, we are talking about a 6-month high in the share price. That's exactly what I'm looking. And the last thing is I want to see good volume. So financial results, good volume, share price breaking up. So Doc Anywhere could be heading towards that. Stu Percy, I do miss your odd videos when you went through a report in depth. Yes, I will do some of those, but not as many as I used to do. So someone else, Marianne, does like my ASX daily rundowns. So I like this feedback as well. If you like my ASX daily rundowns, tell me about it. And I just know from viewership that a lot of people do watch them. So some people watch them, or not some people, some of those ASX daily rundown videos get quite a few more viewerships than the other ones, but usually that's on a bad day, which is unfortunate. So in a way, I do like bad days because more people watch my videos, but I don't think that. That's the way I should be thinking. Yes, standalone videos, please. Unlike us, most people won't have the patience to be watching so many companies. And there's another one saying, I love the current format with the daily rundown videos. I get more out of your daily rundowns, which go for less than an hour than I get from a whole day of Ausbiz. Well, there you go. So a lot of different opinions. So that's great. And Ben, all of this must have been when I was discussing this. I like your daily rundowns. Good to opinionate summary of what happened each day. In-depth single stocks videos I also appreciate. They probably have longer shelf life. Yeah, they probably do, but even because they have longer shelf life, still don't get nearly as many views as ASX Daily Rundown views. I do want to do educational videos because they have extreme shelf life. And ultimately, that's what I want, extreme shelf life. You could watch one of my educational videos 5 years, 10 years from now, and it's still relevant. And also, it's educational. And also, when I do educational videos, I also learn. The best way to learn is to educate. Okay, I'm going to end it there because I wanted to get through more of these, but I'm going to end it there for today's video. Sorry, James Dean died in 1955. I'll talk about paying 35 times Wes farmers, which only grew by, I'll talk about this in the next video because I do want to talk about this. Yeah, I don't understand. Okay, I'm going to leave it to the next video. Okay, so if you have any questions, any thoughts about daily rundown videos versus standalone videos versus educational videos, who knows, in 3 years' time, maybe I'm only doing educational videos. Maybe I'll get the travel bug and am I only able to do educational videos? Who knows? Anyway, so leave your thoughts in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.